In this half of the analyst day proceedings, what we will do is I'll go through a few items on retail. Harsh will come on and cover wholesale and the other businesses that are there. And Venkat will wrap it up. Venkat will come up with the wrap up on the rest of the stuff that we needed to cover today. I appreciate Manian and Venkat have clearly articulated a very large part of what we're going to do for the next 3 years. And I'm fairly certain there have been a large number of questions that have come up on the basis of that. Our intent, therefore, is to keep this session a little short. We'll try and complete it as soon as we can. So that gives us an opportunity then to interact on the questions that we've received, because that would probably be the more useful aspect of this whole analyst day. Nearly 2 years back, in the same room, we had met together and we had a very detailed presentation to the group of analysts that we had. I thought it would just help to recap a few of the data points since then and our journey that has happened. Deposit growth has been steady. We do know that there have been challenges in the industry. What is notable, and if you had participated in our investor call on 31st December, post the third quarter results, you would know that our retail granular deposits continue to be very good at about 82% of our total deposits. We continue to grow our strategic assets, namely credit cards and business banking, both of which I will cover in some detail in the later parts of my session. Over the course of the last couple of hours, you would have heard Manian and a lot of Manian, Venkat, and Ria, for that matter, speak about the fact that our entire philosophy remains digital at the fore, human at the core. Rishta aap se hai, sirf aap se nahi. And these are not just mantras for us. These are really tenets that we embed into our people and into our processes. As an indication of some of the progress we've made in that, and you will see that on the slide, if you look at the NPS survey results, and this is a survey that NPCI conducts on behalf of all banks, we continue to do well from an overall NPS perspective. What is even more notable is that on particular products, for example, UPI, one of the largest volume of transactions that has processed through UPI, we are ranked 1 out of the 13 banks that are surveyed by NPCI for UPI. I want to spend a minute on the bottom part of what we've covered over here, which is on the CX implementation. We started a journey on an implementation of a CRM solution about 3 years back. The solution, which is an Oracle solution, has 3 components to it: sales, service, and marketing. The service and marketing components are nearly done and well embedded. Sales, we have a few more modules to work on and complete, but the progress that we've achieved over the last couple of years has been notable, and we do believe this will be a trigger to greater success on the sales front in the coming months and years. On marketing in particular, we use a tool called Responses, and I'll give you just a couple of examples of how this has helped us. One of the challenges that has been faced by the card industry, both the debit and the credit card industry, is that customers tend to keep their card controls off, and while they're at a transaction, they forget about the fact that their card controls are off, and this becomes a decline. Through Responses, we now have an API solution that can push a notification to the customer on his mobile banking that enables him to literally on the fly switch on his card controls and thereby complete the transaction and come back to switching it off if that is what he desires to do from a security standpoint. This has resulted in incremental spends of nearly 30 crores per month on our debit card and about 3 crores at this point of time on credit cards, which we've just started the journey on. Another example of how Responses has helped us is in our customer base, which is a very large chunk of the bank's customer base, the process by which the customers had to fund their account after it was opened was taking an inordinate amount of time. We did some tweaks using Responses, and we've now got nudges in place which enable the customers to not just know the fact that their funding is required to be done, but also enables them to identify what is the easiest way to fund the account, what are the links available, and how they can fund their account. This has reduced the average time of funding from as high as what used to be 80 odd days to about 11 days, and has also increased the size of the average funding that is done. These are just 2 examples of what has been a remarkable journey using the marketing tools, the ability to do customized nudges and notifications based on the profile of the customer and the usage pattern of the customer. Digital, Manian has covered a very large number of items on digital. I'm not going to repeat that, but a couple of call-outs that I would like to focus on over here. You will see our digital assistant Fedi, and noting to the effect that nearly 25 lakh queries a year are now answered by Fedi. These were typical queries that used to go to our call center agents, and we had call center agents deployed on these queries. By the use of the chatbot, we've been able to rationalize our call center capacity and reduce it. Our Fed Mobile, which is our mobile banking platform, clocks nearly 21,000 crores of monthly volumes. Our rating in Play Store is now one among the top 4 in the banking industry. And as Manian mentioned, we do believe that there are huge opportunities for improvement in Fed Mobile, primarily from an architecture perspective, as well as from an ease and convenience of usage. That journey of improvement for Fed Mobile has commenced, and in the next couple of years, we will in phases roll out a materially improved mobile banking experience for our customers. Our presence in the market has been increasing, and what you see out here is just a sample of some of the work done. Manian mentioned the fact that we recently completed a diagnostic study on brand salience. The results show that our brand consideration, particularly outside our home state, has gone up in the last 3 years. Having said that, this is a journey, and the more investments we make into things like branches as well as marketing initiatives should help us gain greater brand salience, particularly outside our home market. Over the next few slides, I'll just go through some of the details of branch banking and each of our key retail products. We have kept all these slides quite simple. We have one slide which gives a snapshot of the business and another slide which focuses on the key initiatives. I don't intend going through all the initiatives in details, but will call out a few notable ones. And Manian has covered a large part of that in his presentation too. The biggest strength for us on the branch banking side is actually our customer connect. You will hear this repeated theme across all the presentations. This was quite evident recently when Manian and I had the opportunity to interact with customers in our Middle East markets. And the connections that they have developed with the bank are deep-rooted and are loyalty beyond compare. Our relationships give us the platform on which we can develop greater products and greater services for them. We recognize, however, that we have missed out on certain opportunities relating to the younger generation, and we're also not completely present in some of the high GSDP states. Our focus, therefore, is to expand distribution into the chosen states. We have gone down to a pin code level to identify where do we think our presence is most required and what do we need to do to improve our presence and get branches in those locations. The other aspect of what is notable is that our capacity that is devoted to sales has been comparatively lower when compared to key competitors. And therefore, addressing some of these will be key initiatives that we will be working on. The single biggest initiative in the branch is what we call Free the Branch. Manian covered this in detail. The visual imagery of this is really about the fact that if you visualize the branch today, where a larger proportion of the work done in the branch is more operational in nature, and a forward-looking view of this would be where a larger part of it is obviously devoted to sales and front-end service. The customer connect that we have developed is something that is a strength for us and is not something we're going to lose in this process. However, converting that service excellence into a strategic advantage and using that to develop greater sales connections is where the philosophy is. The Free the Branch project has many, many dimensions to it. We have already identified a range of mini projects that need to be taken up to deliver on this visualization that we have in mind. And we have deployed resources who are devoted to this activity, and over the next 12 to 18 months, we'll be able to reshape how our branches look. Following through from branches, deposits, and as Manian said, branches will be clearly the key conduit for us to grow our deposit base. The customer relationship is evident from the fact that we have a dominant share of deposits in our home market. How do we translate this into a dominant share in other markets is a key focus for us. We see an opportunity in the mass affluent segment, not just for deposits, but also for allied products like wealth and retail loans. Gaining share in this segment will require delivery of new products, new capabilities, enhancing coverage of the customers through RMs. While we do have about 300 odd RMs serving this segment, we plan to increase the capacity and find alternative ways of reaching out to these customers. A range of initiatives by its very nature in the case of deposits, and you'll see them listed on the slide. I'll call out two of them in the interest of time. The first one is the focus on current accounts. As Manian mentioned, while our SA to deposits ratio is probably in the ballpark of what is close to the best in class, not yet there, but close to best in class, the gap is very notable on the car side. And therefore, the focus is on expanding our car offerings. As an example, we are one of the banks that has deployed sound boxes, and as we speak, we have about 50,000 sound boxes that have been deployed across merchant locations in the length and breadth of the country, and the balance in the allied car accounts has gone up to about 1,000 crores. We need to do much more than this, and we need to have customized offerings for the various subsegments that are present in this large conglomerate of car. Harsh will also speak about car in his deck because the contribution from commercial and corporate banking is also high in this segment. The NR proposition, again, at the cost of repeating ourselves and repeating what Manian said, this remains a moat for us. A significant market share in NR deposits, in particular on NRE deposits, we have a significant market share. Having said that, if you peel the onion a little more, it is evident that this share is primarily driven by the GCC Kerala corridor. How do we go beyond GCC to the rest of other countries where the Indian diaspora is present? How do we go beyond Kerala to the rest of India where we are where we have branches and we are adding branches? That is really the initiative that we are working on. This will require a very different way of opening accounts, a very different way of servicing accounts, and more importantly, having a plethora of products that suit that profile, because the non-GCC diaspora tends to have very different needs from the GCC diaspora. So getting that proposition right and delivering that proposition in an online-offline mode is what is one of the key initiatives we are working on. Manian also referred to mass affluent, and you will see that in the slide, which is the products that we need to develop for mass affluent, and most of them will be around the wealth management proposition. On wealth and insurance, as Manian mentioned, we've made considerable progress on the insurance side, and our insurance offerings are quite close to best in class. This financial year, we added 2 more life insurance partners, both of whom have started ticking well, and what used to be a single arrangement with AGS Federal as associate company now has 3 companies in the fray from a life insurance perspective. Moving to the wealth side of the business, and that's where our greatest focus is going to be. We will invest in new technology that is designed to help DIY journeys for the mass affluent, while at the same time ensuring that we have a high-touch physical intervention for the more affluent segment. The non-resident population that I spoke about needs a very different kind of wealth management propositions. They need bespoke solutions that cater to their needs because they're very different to the resident population, and those will be delivered by us. So if you take this entire aspect into account between branch banking, deposits, and wealth and insurance, our focus is really on ensuring that we have adequate number of car products in sight for our customers, as well as ensuring we have capabilities that deliver to the mass affluent. If I were to move on to the credit card once, we are relatively late entrants into this entire space of credit cards, and there have been some challenges in sourcing and growing this business. Having said that, our digital journey that we have is a very well optimized one, and our product offerings are also strong, which is evident from the fact that our spends per card tend to be best in class despite our late entrant into the business. We are seeing great traction in areas like the use of credit cards on UPI. We have also resumed issuance of certain co-branded credit cards with Scapia, for example, and we do believe we are well positioned to be able to scale up this business. Our single biggest initiative right now remains how do we scale up more numbers on credit cards. Several measures have been put into place and are being put into place. We have deployed feet on street to reach out to both existing and new customers. The entire process for the feet on street continues to remain digital. We do not have a physical application form, but the physical touch helps to ensure conversion rates are much better than what they would be normally in a self-service journey. Expanding our pre-approved offers through a multitude of pilots and tests is also underway. We are working on the commercial credit card proposition, which you will hear of shortly when we're ready to go into the market. We do believe that's a very close value proposition to the SME side of the business, which is one of our chosen target segments. We have access to a number of platforms for EMI conversion, which is very important because the industry as a whole is seeing revolver rates coming down. Having said that, we remain cautious on the overall unsecured space. Within the given boundaries of unsecured, credit card is clearly definitely more lucrative and attractive to us than personal loans. On personal loans, we have demonstrated steady growth in the personal loan space, not very aggressive given the current market environment. We focus on cross-sell to existing customers akin to what we've been doing on credit cards. While remaining cautious of the market, we do want to expand our offerings, and one of Manian's slides referred to the fact that we will use a combination of organic and partnership. Today, it's at about 38% is partnership driven. We would like to move it to 50% being partner driven. Why do we believe this is a better proposition? Because the partners we choose are the ones with a certain level of database already available to them. You can definitely then pre-qualify the database, if not pre-approve them, and give the offer, make the offer to them, thereby enabling conversion rates to be much better and cost of acquisition to be much better. We already have arrangements in place with a couple of leading market players, and in the process of expanding that offering through many more market players. Credit line on UPI is something we're working very closely with NPCI on, and timelines are still being worked on. If I were to move into auto loans, this is an industry that we believe we know very well. Our credit quality has been impeccable, and I touch wood when I say that. And we see a huge opportunity to expand margins by moving into the used car loan segment. Our propositions, therefore, have been designed over the last few months to capture a greater share of the used car market, given the fact that yields are better in this segment, even after adjusting for risk. We do pride ourselves on the fact that we have an effective digital platform for car loans. Nearly 65% of our loans are processed completely in a digital fashion with no manual paper intervention. And out of that, nearly 75% are actually straight-through processing without the need for a credit analyst to come into the manual underwriting process. Leveraging these capabilities and using a regionalized underwriting process where manual underwriting is required will help us to improve turnaround time. And as all of us who are familiar with the industry know, turnaround time makes a big difference in the car loan market. The next product I'd like to cover briefly is the loans against property. This is one of the products which has a medium yield and has been a business which we've done quite well. And given the secured nature of it, it still delivers good yields. Our focus in this area is about expanding distribution. How do we get more and more feet on street who are devoted to loan against property by recalibrating some of our approaches to the segments which we serve? The other aspect of it is we are in the process of creating more specialized teams who can focus on loans against property and digitizing a large part of the underwriting process so that the cost of acquisition and cost of origination comes down. Home loans, this is a product which really is something that, again, we've done well for a long time. Having said that, the market is so competitive that pricing becomes probably the only lever that all banks work on. Our focus has therefore been on seeing what can we do to improve customer profitability here. And cross-selling savings bank account is probably the best thing that we can do in this segment. As we speak, nearly 85% of our home loan customers who are onboarded, for example, in the month of Jan, have actually opened savings accounts with us. And this has been achieved through a plethora of interventions at the sales level as well as good product propositions for the customer. Our analytics show very clearly that a home loan customer who has a savings account tends to keep higher balance in the savings account as the EMI gets serviced through that. One of the initiatives we're working on, and this links back to the Free the Branch initiative that we have covered earlier, is a large part of our activities on home loans are still done at the branches. how do we free the branches from some of the operational activities relating to the home loans, and therefore regionalizing some of these activities into retail loan service centers, which is along that continuum of elimination, centralization, regionalization, will help us. We've started this off in a couple of centers and are beginning to see the results of that, because it helps us the ability to not just free the branch from the activity, but also standardize some of the processes and ensure errors are minimized. Business banking. In Manian's presentation, you would have heard many, many references to the SME segment. The business banking segment speaks to that, the business banking business speaks to that segment of the customers. The yields in the segment continue to be attractive. They are collateralized in our case, and also there are PSL benefits that come from it. Having said that, there are clearly some more initiatives we need to work on in the business banking space. Forex and trade. One of the areas where we do believe we have adequate opportunities to penetrate. Originating customers with Forex needs, originating customers with trade needs has been a focus, and we've got now a feet on street who are whose entire proposition is around approaching customers with Forex and trade needs and originating them onto our books. Another key offering we're looking at, something we haven't done so far and we're working on towards, are business installment loans. Our SME book is collateralized. Nearly 90% of it is collateralized. We don't do much of unsecured business. We don't do any unsecured business loans. As we believe we've built up the capabilities now on the unsecured collection side as well as on the unsecured credit underwriting side, we do believe this is an opportunity to make an inroad into the business installment loan market. This is not to say that we would be rampant about it and do kind of rampant sourcing of it, but we have a customer base who we can curate very well and give them pre-approved offers for business installment loans. Current account balances obviously is a key aspect of our business banking proposition, and that's something that is adding to our entire journey towards becoming higher from a CAR to deposit ratio. Getting into a stage where we have differentiated value propositions for the textile owners of Tirupur to the sugarcane farmers of Kolhapur is something that we've done some work on, and we're going to expand that. So that's really the entire synopsis of what we are. A large part of what Manian covered in terms of the themes, the 12 themes, resonate across every aspect of retail banking. And as they say, retail is really about detail. How do we therefore make sure that each of these initiatives that have been listed down are tracked through to completion and executed well, will form a very integral part of our strategy. As we say, a strategy well written is great, but a strategy well executed is even better. Thank you.